Anyone have a view on India?
Yeah, I can chime in because I run all our investment activities for India and across Asia. So there's right now there's quite a bit of pain with COVID, and it's really covered up a number of the political issues that have increased nationally, and so I think there's going to be a lot of caution exercised up to the next election, assuming how India gets through this ramp up in the COVID situation, but then the underlying grassroots issues will continue to increase. And so what happens in the politics is India every 5 years, 10 years goes through this political shift. They consolidated power recently, but now there's growing concern. We see it just given our impact around the consumer base there and our partnership with the largest family in India. So I think it's a wait and see. I think if you look at alternatives, private equity has consistently underperformed, and DPI is sort of a word that's stricken from vocabulary. Venture has started to show some results, which is good, as well as real estate and some private credit products. A lot of people are saying there's another opportunity again in venture and growth. Private equity remains sort of a challenge, but so overall capital returns, we take India returns and alternatives versus China, there's still no comparison.
Thanks, Vishnu. But
Mark, I would think, again, depending on your time, if you've got a time horizon like Eric, I think India is an economy and a market you want to invest in. They certainly have, the fundamentals, a growing population, educated, that are going to benefit long term.
You would think. You would think the returns are there, but it's and I've been personally investing in India since 2004. And then in various forms, and forget about the currency, being about half of where it was 10 years ago. You have the growth. There's mispricings that continuously take place. So when you enter, you often enter in at that higher, at a price that that should not be, just completely mispriced asset. And you have issues then with dilutions that take place, restructurings. So private equity overall, we've seen, generally the returns barely make carry, if at all, for managers on the private equity side. On the venture side, it's slightly better. Sequoia had one exit that netted them something like 35 times their money recently, and they finally went over 2x their total investments in India. And they're, and you think on the venture growth side, they're the leader. They've been there since the beginning. Of course, they're globally have a tremendous track record, and they've barely had success. So it's versus China. China, we continue to increase our exposure to China. We continue to see realized returns across venture, private equity, even real estate.
Yeah, it was another Dalio made, right, Sean, that the world is underweight China, and in the capital war, you should expect more of a shift back to who's going to pay for our bonds. Well, Kathleen, in the beginning, you were talking about preparing for a potential weak U.S. dollar, higher inflation,